3,
Bring it.
2, 1.
All right, everybody. Welcome to episode 2 of the Beef and Bitcoin podcast with your hosts, Brett and CH. We're still working on doing the editing for episode 1. So if you're listening to this prior to listening to episode 1, don't worry. Episode 1 is coming. So you can always go back and take a listen to that. Quick shout out. The podcast is brought to you by us in this case. So if anybody wants to shoot us a sponsorship or you want to do some advertising, please send us a DM or let us know. Also, a quick shout out to a bunch of podcasts that you should be listening to if you aren't already. Marty Bent podcast, Tales from the Crypt, Stefan Livera podcast, Noted podcast with Pierre Rochard and Bitstein, Bottom Shelf BTC, Peter McCormick, What Bitcoin Did. So please subscribe to those podcasts or YouTube channels and get listening. So, all right, it's episode 2. This one's going to be a little quicker than the last one, a little bit shorter, and we want to talk about a couple of topics here today. So the first one is ICO treasuries, potentially dumping some ETH. So what do you think about that?
Yeah, it's been a big talk, and I know Dyer released an article or finding on this a few months back, and I'm trying to open it up. And it was a big talk. Everyone's been speculating on Ethereum. I have the Ethereum chart open on whether Ethereum will just dump to nothing, basically, because you have all these ICOs that have been collecting Ethereum from especially last summer, when everyone ICO fever was in full pitch into the fall, when people were picking up Ethereum at $100 all the way up to 400, even up to 1500. The ICOs that picked up Ethereum at 1500 are probably not faring too well these days if they didn't do some kind of risk management. We've seen that. We can discuss it later. The Steemit shutting 70% of their workforce off.
Yeah, that's what I'm hearing. 70% of their workforce.
Yeah,
getting the axe.
Another example of mismanagement by ICOs with funds. And I think the big thing I've heard people talk about is a lot of these ICOs just haven't had any risk management. They had free money coming because if they got Ethereum at $300, they got 1,000 Ethereum at $300, and then they wrote it up to 1,500. They didn't want to. They, for whatever reason, didn't take any off the table because they were all anti-cash, anti-gold, anti-anything that wasn't crypto, and now they're paying the price. It's as simple as that. Ethereum's at $115 right now, and unless Bitcoin decides to push back above 45.50 in the next few days, we are likely going to see a dump down to 3,000. Last time we recorded, I made the comment about lower time frame was looking shitty, and we went with at the end of that podcast we literally dumped down to 3,400. It was literally perfect timing.
Yeah, it was crazy. We were just at it and it dumped right after that.
Yeah.
I was trying to take a look at I saw a really interesting website that had a list of the ICO
treasuries. It's Dyer.
And
I have it open right now.
Okay, gotcha.
Yeah, and I don't think I'm not recording on my screen, but because my screen's recording the Ethereum chart. But for instance, the last check, Digitax IO, their DAO raised 466,000 plus Ethereum, which is absolutely insane. And so that's $75 million, and their market cap at the time is $77 million. It's funny how many ICOs had larger, more F than their actual market caps. Aragon's a good example. $45 million, in USD, and their market cap at the time is $21 million. I doubt it's that now. I bet you it's much lower because ICOs, especially anything in crypto, has taken a hit. Been a lot of volatility these past few weeks. Since we recorded the last podcast, everything dumped more.
Yeah, for sure. And when I was trying to look into some of these ICO treasuries, some of the metrics I saw were that a lot of these treasuries are holding about a little over 3.5 million ETH. So that's around 3.5-4% of the total supply. But I don't think we saw. I think a lot of the ETH sell-off from treasuries was a little bit of FUD. It can't really be said that they are dumping, but the anecdotal evidence of Things like Steemit laying off their workforce, and just the price of all cryptocurrencies really crashing over the last couple of weeks and all of 2018 just really goes to show you that the mismanagement of some of these funds can really put a hurting on your business model. So if you're a startup, whatever you want to call it, that raised a ton of money via ICO, and you watch that pot of money basically disappear, and you need to still cover your costs and your expenses, that becomes a problem. So if you can no longer cover those expenses, you need to either shut down, right, or you need to cut expenses. And I think that's pretty much exactly what we're seeing here with Steemit. And I wouldn't doubt if we see more of these companies, or the ICOs, whatever you want to call them, start laying off some of their workforce, and that's when I think you'll see that last bit of capitulation of dumping ETH to pay developers or whatever else. So I don't think, and it's funny because this was the topic last podcast was are we capitulating, and I guess
I think so. I think we're getting close.
We're getting closer, and we're getting closer. I think we will know when capitulation is here, because it will seem like crypto is just over. It's done. Close the podcast. There's nothing left to talk about. It's all over. Once you're feeling like that, then capitulation is here.
Yeah, I'm looking at the Steemit chart, and it'll be recording on the screen. And Steemit is down, even just today, it's down 11% in the US dollar. It's 35 cents now.
Wow.
And it peaked out. I remember I had some Steem tokens because I wrote on the platform for a while, blogged, wrote articles. And it peaked out around $6-7 here. It's pretty crazy. That's for a platform like that to just not manage funds properly and not set aside, whether cash, bonds, you name it, and just put money aside to think long term. And here again, it was the naiveness of people on assets that and we're all guilty of this. We were in it too, where we were up thousands of percent. But you get stuck in that euphoria, that mindset that it's not going to turn around. You're at that permanent plateau, as they say, and that 100% proved wrong so quickly. And now that we're basically 11 months into this bear market. Technically, the bear market started in January. So this is, we're coming up on month 12, and I think we're seeing there's hedge funds shutting down left and right in crypto that jumped in on the way up and are now shutting down. Because it's pretty crazy. There's crypto traders who've done much better than these hedge funds, and whether these hedge funds were just stuck in the mindset that we're going to hold for the long term, which is pretty dumb considering crypto's volatility. It's just proven this again. There is capitulation happening left and right, and I think when Steemit still has a $100 million market cap, so you got to bear in mind XRP, Ripple, 14 billion, Ethereum still is 12 billion, Stellar 3 billion, EOS is 2.6. Litecoin's 2 billion. So you got to keep those in mind, that that's still a lot of money, and these things could still go down.
Right. The market might be down in the 90-ish% range overall.
Oh yeah,
a lot of these,
majority, everything besides
coins.
Bitcoin possibly.
Yeah, don't forget that even though they're down 95%, they can still drop another 50% from current levels, and that wouldn't surprise me at all. I remember when I first got into this, early 2017, and ETH was 40, and that sounded really expensive at the time because it was $4, not too before that. So these levels, you think, ETH can't drop below 300. 300 was that critical support level, and now here we are getting super close to that double.
We hit double digits on numerous exchanges. Yeah.
Yeah, I don't know. I don't think people are going to be too happy when ETH is in double-digit territory, and I think that's when potentially these treasuries might need to rethink their risk management strategies.
It's too late.
At this point, It might be.
Even looking at, I have CoinMarketCap open, and Bitcoin SV. For those that don't know, there's Bitcoin SV and Bitcoin ABC. The split between, the interfeud between Craig Wright, Jihan Wu, and Roger Ver, and Bitcoin Cash, which further just proves what even Bitcoin Cash is, which is just a giant shitcoin with $3 billion in value. Bitcoin SV has $1.75 billion in value market cap. There's no way that's justified. And here again, we're witnessing, and I mentioned this last podcast, a global unwind. We're seeing across all asset classes, and despite U.S. equities did rally this week on fake trade news and basically, the Fed being more dovish per se, laying back on, rate hikes, even though I still believe we're going to have this fourth one very shortly here for another 25 basis points for the Fed funds rate. And the Fed's funds rate, for those that don't know, is the money or the rate that money or banks lend money to themselves, lend money to other banks. So it's going to be interesting close to the year, whether you're looking at crypto, equities, at commodities, you name it. We're seeing volatility across all asset classes, and reality is Bitcoin came along because of the 2008 global financial crisis, because people realized that the system was so broken, and it still is so broken. And why do I say that? I say it's broken because every bank has participated in something called quantitative easing, and quantitative easing is simply just inflating the money supply. And for instance, in the U.S., with the Federal Reserve, they buy mortgage-backed securities and treasuries. And what's that do? So they buy those, they put them on their balance sheet by buying them. What it does is suppresses interest rates, and it puts more money in the markets. So and although it's not really in the markets, the consumer doesn't see it. So that's why we don't see astronomical inflation. We only see roughly, as the Fed will say, 2 to 2.5% a year, which is actually bullshit because they don't include like cars. Like when you look at car prices from 2008 to now, like if you look at, for instance, if you look at 2008 Jeep Grand Cherokee and look at a 2018 Jeep Grand Cherokee and compare the prices of a new one, I'll do that right now. There's a huge difference, and you can keep talking here, Crypto, while I look this up.
Yeah, I mean, and that's a really good point when you think about how fractional reserve banking works, and then you think about the coin cap, the supply cap of Bitcoin. That's the exact opposite, and you're going to see, hopefully within the coming decades, how a real economic system operates when the money supply is fixed. And we've never really seen that before. You could make the argument that we had that at a point in time with gold, when the supply wasn't being easily inflated through coin clipping and things of that such. But things will absolutely be different when we are operating on a fully reserved currency. People will spend money differently because it's not cheap. It's not that free money, and it will. People will change, right? They say you can't change Bitcoin, but Bitcoin certainly changes you. Mm-hmm. I've said this many times before. You're at Chipotle. Maybe you might think twice about spending that $2 on guac, because you never know what that $2 worth of Bitcoin might be worth in another decade or two. Yeah. So I think we're going to have a true money, a sound money at that point. And then you're going to see what people actually choose to spend it on. Frivolous spending will definitely decrease.
Yeah, no, we live in a time of cheap money. It's as simple as that. And with that being said, it's, we see it all around us. We see the flaunting of money on social media, the get rich quick schemes everywhere, left and right. And that's what happens in times of cheap money. A system reset, and I hate to say it like that, is needed. We've gotten so far from the rationalization. The markets are so far off. Interest rates are just now upticking finally for once. The European Union, the EU, has been negative interest rates for a better part of probably a decade now. So basically, if you're lending money, you're losing money, which is absolutely absurd. So, in the U.S., we basically we're not even at neutral rates, because if you include, a 3% interest rate and then you have 2.5% inflation or whatever, you're making 0.5% of your money in real rates. So it's something to bear in mind where we're at, and when you think long term, like a decade from now, where we'll be. Because you just have to look back to 1980 when interest rates spiked up to 15% after the 70s with stagflation. And that's a great example. And interest rates since then have continually went down. It's been,
I mean, that's a good point. You think about 15% interest rates. I bought my first home a couple of years ago. I want to say my 30-year rate was around 4.67%. Had that interest rate been 6, 7, 8%, I would not have been able to afford my home, period. I would have had to buy a different one. And it will be it'll be interesting to see what people can and cannot afford if interest rates ever get up that high. I have no idea if they actually would or not.
Mm-hmm.
But when you start playing with the natural rate of interest, which you could arguably say we've never actually seen a natural rate of interest since the money supply has always been manipulated by by various central banks, things will change. Things will absolutely change.
Yeah, no, it's an interesting topic to talk about. We could go longer into this, but I think we'll move off to something more focused on Bitcoin here. But it's interest rates are upticking, and they have broken out of a long-term trend. And I can maybe pull it up here quickly on a chart. There's this long-term trend I've seen people post about, and that it's I think it's the 10-year, and where it's finally broken out of a channel that's a multi-decade channel is what it is. I'm gonna just zoom out as far as I can here. And I know I'm not sharing my screen with you, but the people viewing, if it's on YouTube, will be able to see it. There's a multi-decade channel that's been going on for basically since '87. That we finally broke out of, and it's pretty crazy because that's 20 years plus of that's huge. When people ask about charting, I'm not by no means an expert, but the longer the time frame, the longer a trend line, whatever, the more consequences it has. And here interest rates are finally breaking out, and we're now at the 10-year. We're at 3%. And that was a few years ago we were at 1.5. So it's something to keep in mind. Interest rates are coming back. Cheap money's going to be leaving soon. Liquidity is drying up. Liquidity is never there when you need it, and we've seen it with crypto. You look at these altcoins. There's very little liquidity. And there's people selling, but there's not many people buying.
Right, and that can cause very extreme price volatility.
Oh, exactly. And that's
when
what we're seeing.
That liquidity just dries up, and you're trying to dump your shitcoin on the market, it can drop really quickly trying to get those orders filled.
Mm-hmm. And would you want to start talking about this UBS? What was the headline they posted this week of that blog? I think it was a blog.
Yeah. The headline was something about UBS says it's time to bury Bitcoin. And I was ripping through Twitter a little bit on that specific thread to see what some people are saying, and somebody said, it's funny because UBS stock is down 40% from July 2016, and at a time of arguably one of the biggest bull markets we've seen ever in the past couple of decades. So
and to add on that just very briefly, the bull market we have is complete bullshit. Now I'll just say that. Why? Quantitative easing, fucking with the money supply. You have share buybacks, which share buybacks were illegal up until 1982. That's when they removed share buybacks. And when you look at what happened in 1982? 1982 was the beginning of the millennium boom, as they call it. And 1982 to 2000 was a very long trend, and that's why my whole life I've been taught passive investing, because all these people, parents, grandparents, they lived through that. Their stocks did great. They were up thousands of percent from doing nothing, from sitting on it. Well, the narrative behind passive investing, my friends, doesn't stand. When you look at, I saw a great chart comparing U.S. equities to international equities. U.S. equities, the only ones that were indice-wise, were up over the past decade. And you're looking at all these international equities, and they're all down or flat. So the whole passive investing narrative is a load of shit. It's a load of shit. And so that's why you have to understand that times change. Nothing's ever the same. And I'm looking at UBS right now, and it's at $13.
Yeah, absolutely. And this is on the back of they have. I was trying to do a little bit of research into this. That some of their French executives are being charged with tax fraud, money laundering, and all the things that UBS pretty much throws at Bitcoin as FUD. They are absolutely guilty of.
Yeah.
So it's not a surprise.
Here's a fun thing. Start of 2018, UBS, or February, January, $21 roughly. Now 13. So it's down almost 50%. We're talking 45% here. That's terrible. That's absolutely terrible. Now, it's not shit going down in 90% range, but, it's getting very close to some low levels here that we're seeing not since, and this chart only goes back to 2016. I'd have to pull up another one. But it's a big deal. And I'm going to find this paper for the Barry Bitcoin because it's hilarious what this guy says. There better be a link to it here. I opened up CNBC, of course. The best source of news. That's being sarcastic, by the way. And I was, CNBC, as we said before in the last podcast, Forbes, whatever you name it, Business Insider. Those people are a load of shit. They don't know what they're talking about generally, so take it with a grain of salt. I saw something recently, and a tweet, because all these ICO influencers are getting in trouble. I think it's our next topic we're going to talk about. But what would be interesting to see is like people like CNBC, Forbes get in trouble because like CNBC was telling everyone Bitcoin Cash was the future in 28. At the end of 2017, they were hyping it up. They were telling people Ripple at Ripple was at $2.60, and they weren't specifically saying to buy it, but they're showing people to buy it. I mean,
right.
It doesn't get any worse than that. Ethereum, same thing. They bring on these so-called experts, and by the way, no one is an expert in crypto. No one, not a CH and I might know a little more than the average person. We understand the bullshit, but we aren't experts. We just read a lot. We try to every day just try to educate ourselves as much as possible.
Oh, exactly. I remember at work, somebody came up to me and asked me about Ripple. This was in 2017, and he specifically stated, he was like, yeah, well, Brian Kelly was talking about it on CNBC, and I just had to, shake my head. I think I sent him a link to the copy of the Bitcoin Standard, and that was kind of the end of that conversation.
Oh, yeah.
But I was looking through that, to get back to the UBS topic here. I saw a statement in there talking about how the issue of not being able to control the supply of Bitcoin when demand changes. And he was talking about that as if it were a problem. And that's actually, and that's, Bitcoin's the only asset in existence that has that particular feature. And that's because of the difficulty adjustment. So with anything else, with gold, typical supply and demand, if the demand is increasing for a particular good, you'd want to see that supply increase. So for gold, if the price is going up, you might see miners start to mine more gold, and then they'll have more supply of gold to then dump on the market, and the price comes back to equilibrium. But with Bitcoin, if the demand increases, the supply cannot increase along with that, right? It's a fixed supply schedule that's known in advance, and we can thank the difficulty adjustment for that. So if the price starts going up and everybody and their mother wants to start mining Bitcoin, that does not mean that the supply will you're not going to get Bitcoins any faster. It's still going to be 12 and a half Bitcoin every 10 minutes, and then of course that moved down to below 7 in in May of 20. So just something to keep in mind.
I think I just lost you there. You hear me now?
Yeah, okay. I can hear you.
Yeah, no, I finally found. I had to search all the way. Had to go across Cointelegraph. Also, Cointelegraph, not the best place to get your news either. They,
Agreed.
There's better. I think if there's places to go, Diar.co, DIAR.co. The Block is very good. The Block Crypto, they have very good. They report very unbiased stuff. And here again, I didn't mention Bloomberg earlier. Bloomberg's terrible when it comes to reporting about crypto. They're all over the place. They're biased. You name it. So whenever you're reading these articles across the interweb, whatever, or TV, take everything with a grain of salt. You gotta really understand who's behind it, who's writing it, and why. Understand their connections. I think there was someone on CNBC who had a connection, like one of the executive producers, like a woman. Her husband was like connected to Bitcoin Cash somehow. It was ridiculous. It was something like that, and someone pointed out on Twitter, like Whale Panda, this was back a few months ago, maybe more than that, like 6-7 months ago, and they called them out, it's like, this is ridiculous. So take everything with a grain of salt.
Yeah, that's absolutely. Follow the money. Whenever you're doing your research or trying to figure something out, especially if it's a profitable or speculative investment and someone is shilling that to you, follow the money. See how they could be profiting or benefiting from the price of that particular shitcoin, going to the moon.
Exactly. I couldn't agree more with that. And I have this photo open here. It's just a screenshot of "I come to bury Bitcoin, not to praise it." And this is the chief investment office of UBS. And he's just talking about basically it's not healthy, 80% correction plus. And he says the evil of the Bitcoin bubble lives on, blah blah blah. This is a classic dude who's he's in a legacy industry. I don't know his extent of knowledge on it. He talked, and when I watched his video on it, he talked about he sees use in the blockchain but not Bitcoin. And here again, without Bitcoin there is no blockchain, and that came directly from the Fed chair Giancarlo himself. That didn't, the CFTC, the CFTC chairman Giancarlo himself, in February 6th when he reported that back, and that was what turned the markets around there. Theoretically, that was the news that turned around the crypto markets then, was Giancarlo saying, without Bitcoin, there is no blockchain. And his opening statement to Congress was phenomenal. He's like, I've had, tried to get my kids into investing for years, and he's like, I could never get it. And then he's like, Bitcoin comes along, my cousins, my nephews show my kids Bitcoin, and all of a sudden they're into investing, understanding markets, looking at charts and stuff. And it's just, here again, everything's different for every generation. The guy for UBS is, he's a boomer generation, probably later boomer generation, probably born in the 60s, and to him, this is something that threatens his business. That's as simple as that.
That's right. I mean, the Bitcoin, the blockchain, not Bitcoin meme we're not even going to talk about it 5 years from now. We're not going to even. It's like if we still referred to the internet as the information superhighway.
Exactly. That's the perfect.
It's just a meme. It's nothing more than a buzzword that's really used as a catch-all to say database that is immutable. I mean, it's nothing more than that. So, I've heard this constantly, Bitcoin, not really that interesting, but blockchain, wow, that is total game changer. And that just goes to show you have no idea, really what you're talking about. But that's good, because all that tells me is that we are so far away from adoption, it's not even funny. Because these are highly educated individuals who still don't get it. And that's just so bullish for me.
Yeah, and I agree with you. A lot of people don't understand. I don't know if we covered it the last podcast. The internet itself didn't come up, overnight in 1990. The internet itself started with with the TP/ICP protocols being developed in the late 60s, being developed and worked on in the 70s. And in the 80s, eventually there was ARPANET, which was, a connection of institutions and military bases across the U.S., which allowed them to communicate, on a very, fast time, compared to what was beforehand, And with that technology and the shutdown of ARPANET in the late 80s, I'm doing very rough here, that was the development of the internet there. That was taken, and Sir Tim Berners-Lee started working on the internet, and that was the basis for the internet. And then the World Wide Web came along in early 92, 93, and then finally 94, it became more of a public thing. And then we didn't see the top of the tech bubble in 2000 until March 2000. So that just gives you a time frame that was almost 40 years, 42, 43 years of that development. Now things will be probably faster this time around, given the spread of information, and like what we saw with crypto went from $17 billion to the start of 2018 or start of 2017 to the start of 2018, $833 billion. That's an astronomical number, return wise.
Absolutely. I mean, the history of the internet is just a great precursor to, the future of Bitcoin. And people said that they weren't going to use the internet or TCP/IP because you couldn't do things like send video, send pictures.
Yeah.
You could only do text. And now, I mean, now it's 2018 getting into 2019, and we're just starting to scratch the surface of streaming 4K video to a cell phone wirelessly walking down the street. I mean, they didn't even fathom that idea, and they completely dismissed it because it wasn't possible at the time. And the internet scaled up in layers, just like Bitcoin's going to do, and now we have access to pretty much any piece of information we want at our fingertips in a cell phone. So it's, I mean, I imagine that Bitcoin will scale similarly, and we're going to see some really wild shit in the next decade, or 2 decades. Things that we didn't even think were possible today are just going to blow our minds later.
Yeah, and here again, a lot of people, especially news, they only focus on price of Bitcoin. And that's a bad way to look at it. There's been so many huge things in the past year, whether you look at SegWit, the Lightning Network. All these little things are just adding up over time, and then more and more people are trying to develop Bitcoin. I mean, I watch your story, CH, and you're always, I'm not a developer. I'm not, I'm somewhat of a tech geek, but I'm not a developer. And I see you always working on developing skills, and so there's now you got to think there's thousands and thousands and thousands of people around the world, trying to develop on Bitcoin. So keep that in thought. Keep that for food for thought. Should we cover quickly the ICO stuff very briefly,
Definitely.
And then the real estate blockchain? That'll probably take us 5-10 minutes tops.
Perfect.
So
all right, start us off with ICOs.
The ICOs. So yeah, everyone knows ICOs are securities for the most part. Now there was recently a California judge ruled, and I don't have the thing in front of me right now, that a certain ICO that SEC went after was not ruled as security because they were I think they airdropped or something, and so they weren't ruled as security. So what that tells you is that ICOs are going to have to be done individually. It's not going to be one broad ban and that's good. I get it. But for the most part, ICOs are not cryptocurrencies. A cryptocurrency, it would be a proof of work. And if it's a pre-mine, it's not, because then there's just a bunch of people holding big bags. ICOs, Ethereum. The only thing Ethereum proved to be good at was a fundraising. That's it. That's what made Vitalik rich. That's what made Joseph Lovin rich. Is the fact that they were able to raise, people were just able to, have white paper and able to, copy and paste some code and launch a website and raise tens of millions of dollars overnight on an idea. And then the SEC's been going after the social media side and other, celebrities promoting ICOs. A great example last year, and I wrote about it numerous times, was Floyd Mayweather. One day I opened up my Instagram and Floyd Mayweather here, on a private jet, sitting down with $100 bills in front of him, talking about ICOs, and I can't remember the name of it. There was stocks, and there was a couple other ones, but now they finally got fined a year later, 14 months later. Same with DJ Khaled. Him and DJ Khaled promoted Centricard, and if you guys remember Centricard, the 3 founders tried taking the $30 million and running and leaving the country because they knew they were screwed, and they all got stopped. And I'm surprised we haven't heard about Jamie Foxx. Jamie Foxx promoted Robinhood, which was supposed to be the Robin Hood of crypto, which is stupid. Here again, people just taking ideas and porting them and throwing them on a fucking cryptocurrency. We saw it numerous times, whether it was Uber, whether it was Airbnb, and that example of Robinhood there. And then Paris Hilton also promoted Lydia Coin. I don't even know if whatever happened to that, but I wouldn't be surprised to see her get slapped with a fine. We saw I think we mentioned Paragon got in trouble last week or 2 weeks ago. So the game got in trouble. And so here again, it's just ICOs aren't cryptocurrencies. They're fundraising mechanisms. But that's the future of, I think, fundraising. Whether you look at assets, whether it's stocks, real estate, bonds, you name it, it gives liquidity to the markets. And, if you have tokens, and I've experienced, you can do anything with them. You can move them around. If I want to give CH just a few shares of Apple, and he wants to send me 3 Bitcoin, we do it, and obviously it's not equivalent because 3 shares, 3 Bitcoin's a lot, but that's my point. And to, close off the real estate blockchain, a great example is I went to school in South Carolina, and recently in Columbia, South Carolina, one of the it was like an office administrating building, and it got rebranded, named the Hub, and it's a college student living place, got put up as a token, the first one so far to actually do it, tokenized it. So for, per token, it's like, it's only for, again, accredited investors, which for those that don't know is someone who makes over $250,000 a year or has a net worth over $1 million. And so for $21,000, it's the cheapest you can buy in. You can get tokens in this real estate, and it pays like a 5% dividend. But it's the first by far. And one of the sharks, what's the bald shark from Shark Tank?
Kevin O'Leary.
Yep, Kevin O'Leary was talking about he's doing a hotel or something in New York, tokenizing. And I think a lot of people are realizing this is big money to be made here. Because you can get people to pool their money and want to develop in this project, and it's a lot easier. Bypass a lot of middlemen, saves a lot of money, and as you mentioned, fewer transaction costs. That's as simple as that. That's what we're doing here with blockchain, per se. In that sense, in a closed sense, it is going to make things a lot more fluid. And if you think about Bitcoin as a layer developing over time, and this was the great thing, if you get a chance, read The Internet of Money, Volume 1 and 2, by none other than, I can't even think of his name at the moment.
Andreas Antonopoulos,
thank you, because I was blanking on that. You got to read those books. Those books really gave me a great perspective on Bitcoin in the long term, because a lot of times technology is smoothed out over time. Great examples: electricity. Electricity was deemed evil for years and years and years, and there was electricity between AC, DC, the currents, and AC ended up being the better one than DC. But a great example is the Paris Fair of 1900. The mayor, when they're turning off electricity, because electricity is brand new, they had the fair going. He stated something along the lines, I'm paraphrasing this off the top of my head, that the fad of electricity will go away, just like these lights, are being shut down. And anyone in hindsight knows that was probably the dumbest statement ever, because electricity is everything and everywhere nowadays.
Yeah, and that it's funny how wrong you can be about the future. And I always, I do like to pick on Paul Krugman for his statement about that the internet will be viewed as nothing more than the benefits of the fax machine, and it's just absolutely ridiculous how wrong someone could be, and people still really value his opinion, especially people within the government or people in power will go and pick up the phone and call Paul Krugman or ask him to write, a 5-page paper on why Bitcoin sucks, and they're going to use that as evidence, most likely on CNBC, Forbes, Bloomberg, your favorite news outlet, to tell the public that Bitcoin is bad, and here's all the reasons why, from someone who publicly bet against the internet and just didn't see that coming.
Yeah. Oh, wiped out completely.
Yeah, it's ridiculous. But yeah, that was great. Yeah, I'm really interested to see what happens with real estate on the blockchain. I'm not 100% sold on it yet, but I have no doubt that the solution to that problem will come to fruition. Yeah. And it's going to be much easier to perform these types of fundraising mechanisms and transactions, because Bitcoin is censorship resistant. I can put a QR code out there and tell everybody, hey guys, send me as much money as you can. I'm developing memes, and there's nothing anybody can do to stop me from doing that.
He is the meme
pretty
man.
Powerful. Well, all right, everybody. Thanks for checking in this
Thank you
week.
very much, and let's say our websites and whatever before we hang up here. Crypto Humor, you can start.
Yeah, follow us at Crypto Humor on Twitter and Instagram. And we're going to get the Beef and Bitcoin podcast up on YouTube shortly. So make sure to like and subscribe when that comes up.
Yeah, and you can follow me, Brett, at Brett Coitus on Twitter. So it's Brett_Coitus. And then you can follow me on Instagram at CryptoCoitus. We are one of the few people who actually talk about real crypto stuff on Instagram. Most people are just a joke. So follow us. We will enlighten you.
That's right. All right. Thanks, man.
Thank you. It's good stuff. Adios.
All right. Bye.